Good morning, everyone, and welcome back. It is the boys, and we are here again with Bubba, Ryan, and Rob, kicking off another Saturday. Just wanted to, kind of tune in and say hello. We try to do this once a week and catch up and talk about how the markets have been treating us and kind of what we're expecting. What's up, Bubba? How was your week?
Everything was listen. It was a pretty tough week. I know you guys had a great week, but from a regular trading standpoint, we like our daily trade finder.
Yeah,
we had 0 trades last week.
Oh wow, over 5.
That's not
amazing.
That's not normal.
Well, you know what? I couldn't find anything where I thought we had a big enough edge to make the trade.
Mhm.
And the wild move. I don't know what you thought about the move on Wednesday afternoon right at 4:00. Right? I mean, that doesn't affect you because you're already done.
Yeah.
Right at 4:00, the Nasdaq rallied 750 points in 2 minutes.
That was the Micron earnings, right?
Yeah.
Micron and
Yeah.
Thursday it did the same thing, not quite as big, but I've never seen a 750 point move from down 400 to up 350 in 2 minutes.
2 minutes.
Right on the buzzer.
Yeah, no, it was very strange because on Wednesday we were waiting actually for the sweep into the 0450, and it happened literally after the market closed, and then they, like you said, they rallied so hard. I clearly wasn't going to be around for that, but
Yeah.
it was just very. This has been some of the most volatile market conditions we've seen in a while, and we really haven't had the news to substantiate it, which is amazing. Rob and I were talking about the negative gamma regime. And, we were talking about in the stream about how apparently Rob's the way he calculates it, we're like the only ones that think we're in negative gamma. Other services don't seem to think so.
I think we're going fucking down, boy.
Me too.
Right?
I think, look, it's never easy, right?
No, it's
No.
But I think the next big move is down pretty dramatically.
Pretty big.
Yeah, there'll be big rallies to sell.
Of course.
But I think the top is in. I think all
Me too.
the price action indicates the top is in. It doesn't
For
mean you
now.
won't get long for a day trade. Again,
Sure.
I'm talking about a macro call that we don't even trade a macro call. I'm not getting short Monday.
No.
I'll get short when I think the time is right to get short, right?
You
I'll miss another move that you gave out yesterday. I sat there for 2 hours listening. I had to go, and bang, there you come up with a trade.
it was literally the moment you got.
14,000
You were gone. You were only gone 5 minutes. It was like,
Yeah.
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 Me and Joe Pesci got fucked in the drive-through. That's
Exactly. They fuck you in the drive-thru.
right. Remember? Lethal Weapon 2.
Exactly. Yeah.
In the drive-through. But you guys had a big week though this week.
We had a great week. I had multiple people in the room tell me that this was their best week ever, which made me extremely happy because, we've talked about this before, Bubba. It's not about what you and I and Rob can do. It's if the people who are with us can replicate. And the fact that we've had multiple people say, hey, this is my best week since I've ever been trading was just a really feel good moment for us because, we put in a lot of hard work. And the thing is, that we don't often get these negative gamma regimes. Like, Rob and I were stating yesterday that, you have to really capitalize on these moves while you can, because it seems like they'll never stop. Every day is 100-point swings, huge moves. And then all of a sudden you'll go a year or 6 months with slow grind, positive gamma, and you just want to murder yourself. So these are the kinds where you really have to make up for, the doldrums, I guess you could say.
Yeah, because there's a lot. Listen, the biggest thing that we can say, and listen, you sat there yesterday. I listened to you I was there for about an hour and a half, I think.
Okay.
No,
you needed to be there for an hour and 45 minutes.
Yeah. Or 35 at least.
If I was there for an hour and 45 minutes, I could have gone out and got a new Ducati also. And instead of having to go out in the street and return Coke bottles so I can eat tomorrow.
Yeah, right.
Okay. What I'm saying is that you have to be able to sit. I mean, when I got on, and for the time I was on, you were saying you missed one trade that you didn't take.
Yeah.
And you were waiting, and you were waiting, and you were waiting. And I don't think that people grasp the concept that there's no pain and no trouble in observing the market and waiting for exactly what you're looking for. I think people believe that they have to trade every minute of every day.
Yep.
and be involved. When the truth of the matter is that how many trades did you make this week? About 6 or 7?
Yeah, I did one.
I don't
a
think
day.
you made that many. Yeah.
No, yeah,
Right.
like I don't. Yeah, it was one a day, maybe 2 on some days. So yeah, at the most 6 probably.
I mean, and that this is what people don't understand. You know, I do a lot of option stuff too, and I teach how to sell extra premium against a current position.
Right.
Knowing if you have a double diagonal on, which means you're long out in the future, you're short in the S&P, in the SPY case, the dailies, you're rolling those every day. So you're collecting premium every day. And I go, why don't you guys now, you're long the extra calls and extra puts out farther, sell premium beyond those on a daily basis.
That's cool.
You're leaving
That's smart.
on a minimum size trade, you're leaving $300 a week on the street if you don't pick it up.
I mean, that's good money, honestly. It's
Yeah.
really
I mean,
good.
it's in correlation. It's an additional add-on to the trade that you're making. And
It's $1,200 a month.
Yeah.
I mean, that's how I break it down. I don't care about the week. It's $1,200 a month. You know what
and
I mean?
it's just sitting there waiting for you. All you got to do is bend over and pick it up.
I think there's a famous saying in there.
You got to forget about the soap. Don't bend over and get the soap.
Yeah. Don't remind me. No.
That liquid soap takes longer to pick up, by the way.
I showed a cartoon this morning on my call, and it was about socialism. And it showed a naked guy behind government, then a smaller guy, people, and then a bar of soap on the ground. Right? So you can use your imagination as to where that was.
You know, I was just having so I mean, not to get political, we're not going to go there because, you know, but I was just literally having the conversation yesterday about the whole socialism thing. And I you know, it's weird these people can't pick up a history book and figure out how this is going to play out. But it's weird how it's kind of like the new hot button right now, which is just so strange. So whatever.
Socialism sucks. I mean, you know, there's nothing like capitalism. Look,
seriously,
everybody should have the opportunity to make as much money as they want.
That's what drives innovation.
I don't get how anybody, you know, but of course, again, we won't get political, but certain people want to see, you know, they want to tax the rich. I mean, the rich pay, whether they beat loopholes or not.
Yeah, right.
They pay more taxes than anybody.
True. Yeah.
Okay. Now, you want to fix the taxes, fix the fucking tax code. Okay?
Seriously. Well, that's like Illinois, right? So Illinois, you know, they've blown up their pension fund and the whole 9 yards. Now Pritzker's bragging that he's balanced the budget, but all he did was raise property taxes and throw in some other tax in there. That's not an answer. How about you trim a little bit instead of adding more tax? Like that doesn't.
How about it? How about cutting expenses a little bit? How about reducing the overall debt? But of course, we know that government, for everybody, whatever side of the aisle you sit on, I sit in the middle. I will declare here on your call, I'm a libertarian.
Yeah, I don't care.
What you do at home on your own, have a good time. But I want my government to be fiscally responsible and quit spending my money because government makes no money, they make debt.
It's
and
true.
they have the taxpayer to satisfy that debt. So all we have is one gigantic Ponzi scheme, okay, that continues. But anyways, let's get back to the real business at hand.
Yeah,
I was thinking about you. I saw a CNBC thing with Jeremy Grantham, and he was actually saying that he thinks that, you know, when you're talking about you're looking for maybe a fall, and we've talked about 45-50%, he was like 70%.
I saw that. Is that
he was like, you know, when the NASDAQ fell, it was 82% after the .com.
I remember that. You want to hear a good story about it?
Yeah, please.
We had, my partner and I, it was unfortunate he's passed away, but we had a trader on the floor at the time that was trading. We had him trading in the NASDAQ. We were short. We were a big short in the NASDAQ.
Okay. And
we told him, Johnny, whatever you do, don't cover. We're willing to take the loss. Okay. We've committed X amount of dollars. We don't care. Do not cover. Okay.
Futures.
And that's when they were $100 a point.
Okay.
Didn't have the money. Okay?
Ow.
And I said, and we told him specifically, do not cover. The Badger and me went out and played golf. We call him at the end of the day. He says, we made we made 50,000. I covered. And of course, that was right near the top. They obviously went down. Not that we would have been short all the way down, but
right. Of course, no,
we made a little more than 50,000.
We would have made a little more.
You could sniff that out. It's no different than, believe it or not, in 1987, when I was on the floor, we used to clear Brant, and we had big offices upstairs where everybody hung out with bagels, coffee, TVs, and whatever, played cards. But there was a newsletter writer back then by the name of Dick West. Okay, and in August of '87, on the bottom of his newsletter every day, he would write, "Sell, sell, sell.
Get out of town."
Swear to God. Starting in August, now the market didn't crash until October, but it was coming down. People ignore the warning signs. You want to talk about warning signs, okay? And I know you're just a straight technical trader. You don't give a shit about all this, but right now they're going back to stated income instead of proving your income for houses. Their builders are offering 0% financing, 0% down to get them in the house. So what does that tell you? It tells you that they're overextended. They've got too much inventory. They got to get rid of it, and they need to, at least, even if it's bad debt, they got to create it. So the warning signs from an economic standpoint, there are so many warning signs to this market that, again, will it fall tomorrow? Well, it won't fall tomorrow because it won't be open. But I have no idea.
One thing I was going to ask, because we never, Ryan and I haven't traded in those kind of I don't want to just say regime change. Those are like life events.
Extreme,
you know what I mean?
Yeah.
And one of the things Ryan brought up last week is he's said looking at the market and the price action specifically, he said the market felt fragile to him. Do you feel similar to that?
I think the market's going to collapse. I think it's very fragile. I think, if you look at a few things out there, again, you go from the debt, look at the credit cards. 13% of the population is 90 days past due.
That's true. Yeah.
They're never getting out of debt.
Okay?
Yeah.
7% of car loans are in default. 6% of mortgages are in default. Okay. And that's what they're telling you. So,
those are the ones that
listen, I think the banks are in trouble again. Unfortunately, we're the schmucks who have to bail them out. So, but again, I don't trade based on what I'm talking about now.
Right. We can't because it's a different time horizon. But
that in the next day or two, maybe the market at the end of the quarter, there's going to be a rip your face off rally.
Of course. It'll be like, it's the perfect time to buy.
We've sold off pretty good over the last week. There's going to be a rip your face off rally. They show up out of nowhere, but that's the advantage for when you're nimble and flexible and using numbers like you guys use. Okay. It gets to this point. This is a buy. This is a sell. You could care less. And anybody who's trading should care less about what the macro view of the market is. They should care less that I believe, and I've said before, that I believe we're going down 40, 60%. That has nothing to do with the first trade I'm going to put on Monday. Whatever it happens to be, I have to read the trade plan tomorrow and then decide on where I'm going to work my levels. Okay?
Well, you know what's interesting about that thought, right? So, and this is serious, and I'm going to, from a vulnerability perspective, I'll put it out there. For probably 10 years, and it really until recently, I actually used to care. I'm like, oh, I knew it was a short. I missed the 100 points in the overnight. I'd be so pissed. Those motherfuckers, God, I wanted that so bad. I felt like, because I kind of knew it was coming down, I felt like I missed something because I didn't get the trade, right? The other day when we woke up, we were down 100 points. Under normal circumstances, let me just rephrase that. Many moons ago, I used to be upset that move happened without me. Now I just come into the day because our job is to extract money out of this market, regardless of where it's at. It doesn't matter. I don't need to catch the move. I just need to have a setup for the day. And it took me a while to get to that point. But now I don't really give a shit. I'm like, oh, we're down 100 points in the night. Cool. Where are we buying?
I want to quote a great trader.
Huh?
I'm going to quote a great trader.
Okay, go ahead.
We trade the edges.
That's right. Yes. That's all we care about.
You think I don't pay attention, don't you?
That's all we care about.
You think I'm not watching, right?
Yeah, right.
Look, I read a quote every week from Ray Dalio.
Oh,
Whole
nice.
market structure is about probability.
Right.
That's what you're trading. You're trading. Rob has numbers to come up with, and you put together this trade plan. You're trading a probability model. It's no different than when I go to play poker later. When I'm sitting at the poker table, I'm playing the probabilities.
Yeah, he's my finance crush, by the way. Like if I had to meet anybody in the industry, that would be the guy I would try to meet.
Yeah, he's not bad. I'd like to meet Elon Musk.
Well, I mean, he's not a trader, right? I'm talking
Well,
about.
he's a pretty good manipulator.
That's you got that right.
I mean, here's a guy that built from PayPal to Tesla to SpaceX.
Yeah, and then bought Cursor for free with an inflated evaluation on SpaceX. Yeah.
Yeah, the Cursor thing is fascinating.
Did that do any trading this week in Merchant Edge? Did that do any trading this week?
I don't know.
I think we had I don't think we had any trades.
Pretty quiet,
and the reason is the volatility was so high that
the risk is too much.
The risk wasn't there. The risk reward wasn't there. Like
I get that. I mean, see, this is what we have to educate everybody out there. That what you hear on some idiot say on CNBC or Fox or Bloomberg or any other channel, it's all bullshit. It doesn't. I mean, you got guys that'll sit there, advisors that'll say buy, just keep buying, always buy.
Just always buy all the things.
And that's why in a bull market, everybody's always a genius. But let's see what happens.
And it's easy, right?
Yeah, exactly.
When it gets a little tenuous, it's again. I think we all in agreement here. We all believe we would all. If you forced me to pick a side for the next few months, I'd probably pick the short side if I was forced.
I'm thinking 7,000, and then we'll figure it out from there. Which is another 354 points.
Yeah, no, I agree. And again, look, people and every other thing everybody was worries about is like we go back to 2008.
Right.
The 2008 collapse was not anywhere near as devastating as everybody made it out to be, right? We didn't bottom until March, but the volatility blew up in October, and that was the high tick on volatility.
Yeah. Right.
Okay. And if you looked at it, I mean, we were still 14 or 15 or 16,000 in November.
Yeah.
And the Dow bottom at 6,000 in March.
What a great buy considering where we're at now, right? 53,000 or whatever.
How about the S&P? The low was 666.
Yeah.
Are you serious? It was under 1,000?
Oh yeah, 666.
I didn't know that.
Do you know that? I like to trade a spread occasionally when I have an opinion. Like if I'm bearish, if I'm bearish, I'll buy the Dow, sell the S&P.
Right.
Right now, for example, the Dow contract is worth, in real money, it's worth 262,000, 265,000. Okay. The S&P is worth right now 370,000. Okay, so there's a divergence of $100 and some thousand dollars. Okay, that spread used to trade in between 15 and 20,000. Okay, wide, and when it would stretch out, I would sell it, and then of course when rubber band would come back in, I would buy it. In the meantime, in March of 09, that spread inverted. The S&P was worth less than the Dow.
So I'm curious. And again, this is just my ignorance because I don't trade the Dow. Okay. Wouldn't you just and again, please tell me if I'm wrong. Wouldn't you normally be short the Dow and long the S&P? Isn't the Dow more like, I was always under the impression like it had a more downside bias than that.
Well, actually, the Dow has if the markets are concerned, if there's concern in the world, the Dow is going to be stronger than the S&P.
Okay, interesting. And why is that? I mean, it's
only got 30 stocks and are considered, used to be industrial stocks, safer things. Not really. It's really not a Dow industrial average anymore. It's now a Dow technical average, but it's still, if you watch, you see the Dow has been outperforming the S&P the last couple of weeks. Okay, which again, it's if you were going to do this for history, and you believe in the statistics that the markets go up 8.5% year over year, then you would buy the S&P and sell the Dow.
Right.
Because you can see that from negative in 2008, there's now $100,000 premium of the S&P to the Dow.
Oh
yeah, I get you.
So the S&P is wider and has more capability to go up. But when it comes to being safe, the more safety assets are in the Dow. The bigger caps, the bigger stocks. You know.
What is your thoughts about what's going on with the VIX right now? Because I would expect with this volatility that VIX would be more elevated than it is.
It is kind of low. You're right.
Well, you know, because of all the hours more that were open, okay, that smooths out the VIX. You know, when I was on the floor, the VIX average like 30.
Okay. It's low right now. Now it's
19, but it's 19 is really not low because if you go back 5 years ago or 10 years ago, it was 9.
Okay, that's fair.
Okay. Again, remember, the more hours they open, and of course, we're going
24.
Remember, we're going 24/5.
Yeah. See, for me now in this current regime for us right now, anywhere between 12 and 15 is fairly low. You know, that's like I always say in the room, like, hey guys, we're pretty low on VIX. We should be expecting some rotation here, just because, you know, the nature of the beast. You know, it gets so low it squeezes. You know what I mean?
Agreed.
Yeah,
I agree. But again, that's you go back again. The more hours they open, because think about it from this standpoint. When I first started trading, let's say, markets were open in Chicago 8:30. Well, actually, we'll start from the beginning. The gold market opened at 7. The currencies opened at 7:20. This is Central Time, okay. And then the indexes opened up at 8:30, okay. They closed at 3:15. That was it. There was no more. Okay. There was no more reopen. There was no aftermarket. Okay. So it gave people, you know, you go home on a Friday after a bad day, and the people start panicking. And by Monday, why are all of our biggest down days have usually been on a Monday? That's because the festering and the concern of the investors that were running to their brokers to sell. They couldn't take it anymore.
Couldn't get it done.
Getting places.
Yeah, they capitulate quick. What are you thinking on gold here, man? Just honestly, I mean, I have spots lower, but what do we really think?
I'm calling the bottom, baby.
Right here?
4,000.
Okay. I mean, I can't argue with you.
I'll tell you why.
It seems legit.
It seems legit to me too.
I'll tell you why. Okay. Look at the put call ratio in gold now. Okay. There's open interest in strikes in gold now in the 25 to 30,000 range.
Okay, so you're doing way more looking than I am. So I appreciate your answer.
Yeah, he might dabble in the options a bit more.
So
you look at a little bit more.
Yeah,
and I think the run up was an easy sale.
I agree.
The first pullback to 4,100, which you bought,
yep,
about 4,400 on the way back up.
That's exactly where I bought. Yep.
Okay.
Yep.
No, I remember. I remember when you bought it.
We took it up to 40. We took it up to 48, and I got trailed out on my runners somewhere around 46. Yeah.
So typically, people overbuy because of fear of missing out, and they oversell on panic.
Right.
And I think based on the options activity, and based on we have now priced in that there's going to be rate hikes, which is not bullish for gold.
Correct.
But gold knows that now.
Yeah.
Okay?
The expectations.
Sorry.
Yeah. So the expectations already out there. It's
inflation's not going away.
Correct.
Debt is not going away, and the fear will drive these markets. So I think, again, could I be wrong? Of course I could be wrong. But I'm listen. When I buy the gold, I'm buying to hold on to. I'm not getting rid of it. Okay.
Here's the other one that had my antennas up was silver.
You think what, 55? I think you told me the other day.
50. I want $50. Anywhere between 53 and 50. I'll buy the shit out of this thing.
Okay.
And it's funny because when it was at $25, I didn't like it. Isn't that funny? If you
Yeah, but look at back there, like it's just hanging. It's not like you don't have any. You could be there for 7 years. You know what I mean?
It didn't do jack shit. It traded between.
I mean, you could like go ahead.
Yeah, I know. So it's funny though, because in hindsight, you look at it and you're like, God, here I am willing to buy 100% higher, but at the time I didn't want to buy 25. You know, it's all hindsight, of course. Yeah. You know what I'm saying? But you know, I just thought it was an interesting correlation here. I was told, and I don't know if this is true. You know, one of the things that I try to look at when we talk about precious metals, and I mean precious metals, not, you know, everything else, is what is the application outside of jewelry? right? So is it, catalytic converters? Is it AI chips like copper? Is it the wire, stuff like that? I'm curious. I was told that silver is going to be starting to use in some of the AI chips, and I don't know if that's necessarily actually true or not. What's your thoughts on any of that? Do you look at that type of?
I understand that you are correct, and that silver is an industrial metal, gold is not.
Right.
Gold is considered money.
Yeah.
Silver is considered not only decoration and jewelry, but also industrial, along with copper. And of course, we've seen copper have a pretty big move, going up from $3 to $6. And again, AI is going to continue to drive the price of copper.
I agree. I think I've been on this for a year. I think this is the long-term AI pseudo play for real.
You're a Bitcoin guy.
I am.
Did you ever mine Bitcoin yourself?
Nope, I'm waiting. I haven't bought yet. I'm waiting.
Did you ever mine it?
45,000.
Did you ever use the program?
No, like miner, being a Bitcoin miner.
Oh yeah, I've been buying Bitcoin. I've been buying Bitcoin for 10 years.
Not buy it. You could years ago. You could mine it yourself.
Oh yeah. Listen. I had me and my cousin got into mining really early, but we didn't do Bitcoin. Unfortunately, we did Ethereum because it was I was in it for years.
But the big complaint was how much energy it took.
Yes, correct.
Well, now AI takes 100 times more power than it ever took to do Bitcoin.
Nobody's bitching about that though.
And it's going higher. Every day it goes higher.
Yeah.
So it becomes a problem. I think those are great plays. Again, when I trade metals, obviously I'll trade the futures market, I'll trade the options, but I'm buying physical gold.
Hey, look, I tried to buy. I was waiting for this copper pullback to buy a 510, and then they front ran my ass. And so I started looking at copper stocks. As you can see, I got them all down here because they missed me on the futures. And this is how the cookie crumbles. Sometimes look at that alert. It never got hit. I was waiting to buy that pocket there. Remember, Rob? I was like, son of a bitch.
Yeah.
Like all these stocks, they got so close to my spot, but they never actually got my spot. It was such a huge disappointment because I truly believe this is a 5 or 10 year play as AI continues to kind of manifest.
That pattern there is pretty bullish, anyways.
Right.
That would look like a cup and handle pattern there.
Oh, you mean the which one? The one this copper one right here?
So far, everyone you've shown is
Yeah.
I remember Investors Business Daily. That was the only pattern that they found that they said had statistical significance.
Say that again, one more time.
The cup and handle is the Investors Business Daily, which I don't know if you're super familiar with, Ryan.
I'm not, which is why I wanted you to say it again.
They have, like sort of older school, like thinking about, buy and hold kind of stuff and where they would pick stocks and things like that and how to pick stocks. And one of the only patterns that they felt had statistical significance was cup and handle for whatever reason. Like they've done a bunch of research on it. And they look at like monthly bars and stuff like that, or weekly bars. You're going to hold that thing.
That's the true problem with the cup and handle itself. Is Rob, you'll find 40 trades while that cup and handle is being built. Okay?
Mm-hmm.
There'll be 40 opportunities for you to trade with inside of that before it's done. It's a very long dated program for a long-term investor. And they are very successful if you have the patience to wait for it.
Yeah, if you're going to buy it and
you just forget about it.
You wait for the cup and handle to appear and they show up, and it takes, again, even if you narrow down the time on your chart, it still takes, months to build out the correct pattern.
Rob, have you actually statistically done that pattern? Like, I know that you really spent some time looking at patterns.
I haven't, and mostly just because like the pattern was the time frame was just too long for what we were trying to accomplish.
Of course.
It was. But I did do a little looking into it like 7 years ago, and like if you're looking at daily, weekly bars and you do see it, like it is fantastic.
Let me ask you could you? I mean, I don't know. If
like Amazon, even like way back, like whoop.
I don't know if you guys are from the same school, but to me, all charts are the same. All patterns repeat themselves, and the shortest time frame has to resolve into the longest time frame.
Correct. That's what I was thinking. Right.
Okay. Could you look for that cup and handle like on a 30-minute chart or an hourly chart?
Yeah, I probably can. Yeah.
Is that an easy thing for you to do? Or is it a
Well,
pain?
I'm not going to put the easy camp, but I could definitely.
Well, maybe I don't want to create more work for you. I want something that if you could just look at it, because I think that would be more interesting to look at.
I agree.
To trade, but again, I don't want you to put. You work hard enough.
Well,
no, but it's one of those things I could sense. I could at least get it. I could.
But
Get
I like
started.
where your head's at, Bubba, because that's exactly what I was referring to as well. I'm like, okay, so we know it plays on the monthly. Like, how about a smaller time frame, Rob? I was like leaning the conversation there myself.
Yeah. No, I was looking at like at that point in time, I was looking at like the stock universe. You know what I mean? So you're just
right.
You've got 4,000 things you're looking at, and you're like, no.
Yeah.
I mean, we could do it on a few. We could do it. We could try it again. Obviously, I don't want to create more work for you, but if you could try it on what you already do, the S&P.
Yeah. I could definitely try it on even like a 2-point range.
That might add to your trade plan.
Yeah.
That might give you some more.
Like a setup, like a
yeah. It's sort of like Ryan. It's sort of like your wing play. Like you can play on a 2-minute, 15-minute, and an hour, but when it's on the 4-hour, go all in.
I have a setup like that as well. That's really, really
nice.
Huh?
The 80%er?
Yeah. Well, you saw that happen Friday, right?
I know. I saw.
You know who didn't take
no money.
You know who didn't take it?
This guy. And I felt like I gave a good explanation why I didn't take it, but it doesn't make me feel any better that I didn't take it. It ran 35 points, and I'm just sitting here watching like, okay.
I watched it with you.
Yeah.
I heard you call it. I watched it. I looked at it. I got it on my machine. I go,
Yeah, not bad. Yeah, not bad. For me, and I tried to make this really clear in the stream. Like this is really. I actually did what I said. What I was telling everybody. I had $1,000 sitting on my desk for about 6 or 8 months because I couldn't stop doing dumb shit. I used to FOMO all the time, and it looked like it's going, or I get in late and I chase, and so. Because, our P&L is all digital now, right? It's just zeros and ones on a screen, right? And so it really had no effect on me when I'd screw up, like, okay, whatever, I'll reset the prop account or whatever, something like that, right? Or whatever, however my mind was thinking that day. So I put $1,000 on my table. And then I literally started saying, okay, every time I was going to take a trade, I'd say, are you willing to part with this for this trade? And if the answer was no, then I wouldn't put the trade on, right? It's like, are you willing to get your wallet out? If the answer is, I'm not really sure, then don't hit the fucking button. Like it really came down. I had to actually do the physical act of having the $100 bills on my desk and saying, are you willing to part with these right now? And if the answer was no, like
what you're telling to me.
Exactly.
Mr. Poker Table over here, right?
I think I heard you mention this yesterday about momentum trading. I suck at momentum trading.
Me too. I am terrible.
I feel so uncomfortable when I'm already chasing a move that I should have caught earlier.
It's the risk. Your risk is fucked.
Yeah, where do you put your risk in a reasonable place? And then if it does even micro pullback, you're like, I'm out.
I can't trade the momentum. I want to be. If it's momentum, I'm either looking to buy the momentum or say I'm trying to fade it.
Me too. Well, we're value traders. You come from the floor. Yeah. Like that's why your blow off trade works so well. You're a mean reversion type situation. And again, we're very much, we kind of trade. We have different styles, but we have similar logic behind it. And so Rob hit it right on the head. The risk when I try to get on a momentum, every single time I get in, I get stopped out, take a loss, and then it goes. I mean, it never fails. I can never find the right stop. So now for me, if it's not a pullback retest, I just sit. I'm like, you know what? I'm not going to, because the thing is every time I don't do it, it works. And every time I do it, I take the loss. So I'm just like, fuck it. I have this completely.
I will give you my fastest momentum stop out was 7 seconds.
Okay.
Oh.
And not only did it stop me out, but then it exploded.
Oh, of course.
Of course, I was not there with it. I was sitting on the sideline with my thumb and my, what.
Right, you got your head in your hands, and you're like, God damn it.
So what do you got on the horizon, Rob? What's exciting? We got something exciting we're working on?
Yeah, we're working on a few strategies right now, and they're all pretty exciting actually. One of the ones that it's one that Ryan is sort of the genesis of. It's something he's been developing for months and months, and something we've observed for the past 18 months together, but trying to like quantify that in a way But essentially, you're looking for like a sweep and regain type of thing, but with like a much higher probability. Trading the edges, looking for that kind of, not all sweeps, not all turns are built equally. So how do you quantify that in a way to, have really good follow through? But we've been paper trading it basically for the past 2 weeks, and I don't think it's had a loss, which is dumb and scary, which means as soon as I put live money on it, I'm going to get my ass handed.
Something's not right?
Right? It's been really excellent, actually.
But you haven't had a loss in 2 weeks either, right?
No.
I mean, we all know that obviously we don't make money every day. There's not unlimited supply of winners. Right. There are losers that are part of it. But it's not a shock that over a 2 week sample period that you have winners.
No, it isn't. It's just like one of those things where you're like,
Yeah, as soon as you get involved, you go. It's what I always tell everybody. That's why I don't like to talk about results, right?
Yeah.
We're kicking ass, and you sign up, and we're going right to a drawdown.
Yeah, exactly. That's exactly right.
Seriously, we had a conversation on the Merging Edge and the algorithm automated products. It's like that's why when we pitch them to people and we say, hey, look, here's the drawdown periods. These are real. I can't guarantee you when you're going to start in this period. Like, do you start as it's coming out or do you start as it's going in? You need to be prepared either way.
Because it will be like it's interesting you say that. I was talking to a friend of mine who used to work for, Point 72, and they were talking about when they would turn an algorithm on, and they would wait for the algorithm to go into like a serious drawdown, and that's when they would kick it on.
Really?
And that was their way of trying to assure themselves that they're not kicking it on at the high. They would try to wait for the algorithm. They'd paper trade it until it went into a 5 to 10% drawdown, and then kick it on.
Get out of town. That's actually
that makes sense, doesn't it?
Yeah, it does.
Yeah, when someone actually tells it to me, yes. But if I'm sitting here doing it by myself, it doesn't. Yeah, no, it totally makes sense. But like, it's one of those things. You're like, yeah, because everything goes through cycles and waves and ups and downs. There is nothing that's bulletproof and 1,000%. Except for those ones you find on Twitter, which are perfect.
Oh, the Twitter, the internet
ones that never lose. 98% win rate.
The internet, baby.
Yeah, exactly.
And you can come and live in my 2-story shopping cart in Chicago.
Yeah, you wait for the drawdown, and they would wait for the biggest drawdown that they could find, and then they kick it on.
That's so interesting, actually.
Yeah, I have a question for both of
you. Yeah.
I trade myself when I go into a drawdown. Okay, I know what my hit rate is. I know what my win rate is. When I get into a certain point in my drawdown, I start adding contracts on a trade.
Okay.
You guys do any of that?
I'll let you answer first, Rob.
I already know Ryan does. I can see by the little sheepish little grin in his head.
Yeah. I do at times. Basically, what happens is if I have let's say we have 6 losses in a row, something like that, then I'm either way out of tune with the market, and then I start listening to Ryan and go, okay, I'm doing jack nothing for another 2.5 hours until the setup comes up, and then you try to tee it up and hit it hard. Because then the probabilities are way in your favor. I notice, me personally, what I can do is get a little too myopic and see things that don't exist. The sort of fractal.
If you're following exactly the way you trade,
right?
Then, in my view, like if I had every trade with Ryan, okay, because I haven't traded with you. I just know you're the brains behind all of it, but
he is.
Anyway, I would definitely, if Ryan lost 3-4 in a row, I'd be definitely.
Then you're on it. Yeah, for sure.
And if you have another loser, I'd be adding again on the next one. Okay. I used to keep, before all these computer shit that we have now, we used to keep a tick bank on a spreadsheet. So I knew exactly how many ticks I was down per item that I traded. And the objective was to wipe out the winners took care of themselves. They went right in your account. The losers you kept track of, and we would continue to press. We used every time we were down 1 standard deviation on the account, we would press, assuming the next trade to be a win. is out, and I'll do that. It's a kind of a formation of the martingale system, but not the true martingale system.
Right. It's not martingale in terms of doubling all your losers. It is like, through experience, time, and your own statistics, like after I've had a certain number of these in a row, like
it's going to turn.
It's going to.
I mean, if you're doing the same thing over and over again, which you are, then it only makes sense to me.
Yeah.
And again, that's why I'm asking, because not everybody.
Well,
I don't teach that to anybody because
it's
very specific. Right?
So for me personally, I know my numbers. I track my stats, right? I'm 70% month over month, right? Have been for years. So if I have 3 in a row, I'm like, okay.
Game on.
I'm due. Let's go, baby. Right. And also here's another thing that you'll find interesting, because I do have red days. I didn't have one this week, but that was an anomaly. Based on my math, I only have an 11. If I have a red day, there's only an 11% chance I'll have a red day the next day. So if I have a bad day, I usually come in the next day. And again, I don't know I'm going to have a green day, but statistics truly do say that the probability is super high. So I'll tend to wait for a really good trade and just kind of lean into it a little bit, and then I'll make up. Yeah.
So you will do that again. Look, it's hard to teach that. It's hard to explain that to people because it's very specific
to you.
Right?
Yeah.
I mean, it's very specific. It's not straight out. You have to have a reason. Your statistics. You got a 70% win rate. Okay?
Right.
You know that if you have a losing day, it's only 11% chance you're going to lose the next day.
Right.
So that's pretty powerful numbers. You got Rob, that's got all the statistics in front of him.
Yep.
So it makes sense because, again, you're not going to blow yourself out. We go back to the risk of ruin, right? You're not going to blow yourself out if you're doing it based on a mathematical probability model, okay? And you're not certainly going to put yourself in you're not going to go from, 3 to 30. You might go from 3 to 4 to 5.
Right. This is all, I'll be frank, this is all new for me, but Rob and I have been working together, I think about 3 or 4 years now. And I came into, is that right, Rob? 3 or 4 years?
I was only going to say 2.5, but maybe you're right.
Okay. Well, it just feels like an eternity.
It feels like an eternity. It's like a bad marriage. Like, fuck, get me out of here.
So I never used to track any of this stuff until I met him. Rob has actually turned me into a numbers guy, which is a blessing because I never really cared. I didn't used to track anything, never gave a shit. Now he's kind of got me in this mind state because we've been quantifying.
You're making more money now too, aren't you?
Yeah, way more. Yeah.
But one of the things I was going to say, because you're talking about instruction and why some people don't get that, I think a lot of young, newer traders that come into this thinking, they read a bunch and they think a lot of things about mindset and other things. And I think the big thing is they don't have the process and edge yet. And they think it's mindset. They think it's money management. And it's not until you get to the point where you're so damn consistent and you track your numbers that you know what's up, then you can do what you're doing. Right. Up until that point, I think a lot of people still trade, myself included at times. They have those emotional reactions, and they don't have that patience to wait 2.5 hours of doing nothing and then pick the high of the day. When it's going straight up, and think you're like, why now? Why here? And I think it does take that a few months, track your stuff, get consistent.
I think that's the biggest thing, Rob, is people don't track their trading. They have no idea what their win rate is.
Because it takes patience.
It takes patience, right?
I mean, if you would keep a journal and write down, so I know my win rate is 68%.
Right.
Yeah.
I know on my blowout trade, which I keep telling my people, it's too high. We're over 90% on the blowout trade.
That's incredible.
No, it's too high.
Yeah.
Right. Because you're going to have your come to Jesus moments too. Yeah.
It means we're not getting enough trades. Okay.
Oh, the sample size.
You're not getting enough trades. Okay. And we're not hitting enough big winners on the trades we're getting. I would rather, and I'll say this out right here in front of whoever's listening. I'd rather hit 70% and have 10 times more of the trades than 90%.
For sure. You need that standard. Yeah, you absolutely need that. You need standard deviations.
The volatility of your own trading, because the truth of the matter is, if you understand the things you and I are talking about now, drawdowns actually work out to your advantage.
They do.
Because
it doesn't feel like it in the moment. It certainly doesn't feel like it when it's happening.
I'll try to tell myself that next week. This is doing nothing but helping me.
I know that you don't get upset anymore when you have a fucking loser.
No, not anymore. No, but here's the thing, though, and again, I don't know. You probably don't know him, Rob. Rob and I both work with a trading coach. His name is Nathan Gist, and he's amazing. And one of the big things that Nathan helped me do was control my emotions. But because I used to get, like, here's the thing: when people start winning, they scream and hoot and holler, and that's just as emotional as being to the downside when you're losing, right? So one of the things that he helped me realize was the fact that, and again, we know this, but until you actually do it, it goes with our conversation. Until you know the numbers, you can't not be emotional because you don't really know. But once you have the math, you're like, fuck it, I took 2 losses in a row. Come on, give me one more because then it's over with. Now I've had my 3 out of my 10. The next 7 are going to be bangers. And so it just allows you to be like, I'm good, whatever, like that's why I shorted the high yesterday because I'm like, the statistical probabilities of it working out are high,
I will say this in closing.
Okay.
All right.
When I was a floor trader, we would pick on the guys that were weak. When you could see you could see their tonsils, when they were panicking. The key is in this business is to have lack of emotion, and be mathematical and mechanical as to what you're doing. Okay, that is the best advice I can give anybody. It's hard to do, but
it's not human.
I had days. Yeah. Listen, I lost a lot of money on days. Nobody ever knew that I was losing.
Right.
Okay? Just like I made a lot of money on days. Nobody ever knew I was making any money. I never very stoic. That is, as long as you know what you're trying to do, you cannot let the joy or the thrill of victory or the agony of defeat affect the way that you attack the market.
Well, the issue is you bring it into the next trade in the next day, and you have to just on the, you know what I mean? Like
you can't even when it happens.
Yeah.
Even when it happens, you can't let it affect you. You have to move on.
It's easier said than done.
I think of it like a Formula One driver, a race driver, or a Ducati rider. Like you're taking these corners and you're going as hard as you can, and if you're not pressing the limit, sometimes you're not going to get around the track as fast, and sometimes you're gonna slide out, and you're gonna pick yourself up, and you're gonna get in there and go to the next race and win because you can't.
It's the same shit.
What a winning team I got here. Yeah, I can't wait to read the trade plan tomorrow.
Yeah.
It'll be on the afternoon sometime.
I know when it comes out. Usually about 3 o'clock my time.
Yep, for sure. Well, thanks for meeting with us today, Bubba.
It was awesome. We'll pick this up next time because we got a lot more to educate these our friends here on.
I think this was a phenomenal little podcast. So thank you guys for joining me today. And Rob, will link up later. And Bubba, enjoy your table.
Rob, I want that cup and handle results by Monday.
All right, we're on it.
You guys have a good one.
Have a great weekend.
All right, thank you.
Take care. Monday we conquer the markets, baby.
That's it.
See you later.
Get the trade the